Good morning, traders, and welcome to BCI's morning market update. It was an eventful week leading into the weekend with fresh US data, heightened political noise, and key technical levels coming in focus across the dollar, WTI, gold, and the Australian dollar. So let's break it all down. First up, let's have a look at the DXY, which hovered near 98 on Friday before easing to 97.85. July retail sales grew 0.5%, which is softer than June's 0.9%, but still a sign of resilient consumer spending, especially with vehicles and online promotions driving gains. Import prices also surprised on the upside, rising 0.4% against expectations of no change, following Thursday's sharp jump in producer prices. Together, these numbers steered concerns about inflation, but they didn't revive bets on a larger Fed move. The market still sees a high probability of a 25 basis point rate cut next month, while a 50 point basis point cut has been priced out. The Fed, however, is under political fire. Treasury Secretary Scott Bessent has openly called for a series of cuts, and President Trump has escalated his criticism of Chairman Powell, even pushing legal action over Fed headquarters renovations. That kind of interference risks damaging the Fed's credibility, which could weigh further on the dollar. Technically, the DXY is holding at key support, forming a double bottom around 97.63, but the index is trading below its 70-day moving average at 98.61, which is well under the 100-day simple moving average at 99.21 and far from the 200-day at 103.02, which are all pointing to a medium-term bearish trend. Momentum indicators, including the MACD, remain negative. A break below 97.63 could open the door towards the year-to-date low of 96.38 and potentially the psychological level of 95. On the upside, 98.6 remains stiff resistance. Reclaiming it could allow a push back towards 99 and the 100-day moving average. Next up, let's have a look at WTI crude oil, which traded in a choppy range between 63.70 and 61.35 last week as attention turned towards the Alaska summit between President Trump and Putin. With Ukraine front and center, markets have weighed the potential for either escalation, which could support prices, or progress towards negotiations, which could weigh on crude. A ceasefire looks unlikely, but even with partial cooperation, it could soften the supply outlook. On the technical side, crude remains weak, trending lower across recent sessions. Prices are now testing last week's low of 61.35, with the MACD firmly in negative territory, and the RSI near 40, suggesting pressure persists. Though conditions are approaching oversold territory, chart support lies in the 61.35, 61 zone. A break below could expose the $60 key psychological level. On the top side, stabilization above 63.09 would open the door towards 64.08, with stronger resistance around $65.76. Next up, let's have a look at gold, which closed around 33.36 per ounce, posting its steepest weekly drop since late June at nearly 1.8%. Stronger US producer prices, the fastest increase in 3 years, dampened expectations for aggressive Fed easing. Traders are now leaning towards a 25 basis point cut in September and then another in October, with Fed officials pushing back against the idea of a larger move. Looking ahead, attention is shifting to Jackson Hole, where Powell's remarks will be closely watched, while geopolitical aspects adds another layer as markets await the outcome of the Trump-Putin talks. Technically, gold is consolidating at the lower boundary of an equilateral triangle near 33.40. The RSI is mid-range, reflecting hesitation. A break below 33.30, aligned with the 89-day moving average, would refocus attention on 33.05 and 33.15, and then the 3282 level. On the upside, the 33.63 marks immediate resistance, with further levels at 33.90 and around $3,400. Bulls will be needing a sustained move above these thresholds to shift momentums towards the bullish side. Lastly, let's have a look at the Australian dollar, which held above its 90-day moving average at 6,479 last week, but remains under pressure. Stronger US producer inflation lifted the greenback, dampening Fed cut expectations slightly, while Australian markets await fresh data on inflation expectations, consumer confidence, and PMIs this week. On the daily chart, the Australian dollar trades near the 65-cent mark, right at the lower boundary of a consolidation triangle at 6495. The pair has slipped below its 40-day moving average around 6525 with the RSI under 50, which are all pointing towards a fading short-term momentum. A downside break could expose the 6449 and the 64-cent mark. On the upside, resistance is layered at 6526, 6576, and the psychological level of 66 cents. Well, the dollar remains heavy under political pressure and weak technicals. Crude is hovering near key support. Gold is consolidating ahead of Jackson Hole. And the Australian dollar is at an important pivot point. With Trump Putin summit and the Fed symposium both looming, markets could be in for significant headlines for this week. That's it for today's morning market analysis. Stay sharp, manage your risk, and as always, happy trading.